Hey miners, welcome back to the channel McNallie Money, the official home of power mining analysis. In today's video, Anthony Power and I are pleased to welcome both Sheldon Bennett, the CEO, and Steve Eliscu, the COO of DMG Blockchain Solutions, back to the channel. They just came out with Q4 and full year results prior to the Christmas break. We want to walk through that in today's video, along with their core and core plus strategy as we enter 2025. Before we get into it, take a second, smash the like button, you guys. Big help to myself and the channel, especially in getting this content to other people or investors who may find value. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comments section below if you're currently holding shares of DMG, your thoughts on the Bitcoin mining sector overall, and outlook on this company specifically as we enter 2025. Now, with that being said, let's get into today's video. Okay, guys, so that's right. Today's interview, we've got the team back from DMG Blockchain Solutions, Sheldon Bennett and Steve Eliscu. A lot on the agenda. We were just talking before we started filming here, a very eventful year and a big start to 2025. So first things first, Happy New Year, guys. Welcome back to the show.
Oh, thank you for having us again.
Thank you, guys.
You're most welcome. So this is kind of the standard question we've asked most of the interviews this week, but as we're a few weeks post 2024, looking back, can you talk about some of the key developments, highlights, or accomplishments at DMG over the last 12 months?
Yeah, happy to go through that. I mean, 2024 was a good year for us, a tough year. I mean, with the halving happening, a lot happened, a lot of anticipation, a lot of people were, guessing where Bitcoin was going, and I don't think anybody got it right. But sort of around the end of the year, it started coming through to some of those expectations. But I think some of the key things for us in 2024 was that we did grow our exahash up to 1.7, and we have a path early in this year to get up to 2.1, which we believe will happen this quarter. And we do plan on exiting the year at 3 exahash or more. And so, if you kind of look at our hash rate, we sort of more than doubled it compared to a year ago. As well, that's our main core business. On our core plus business, yeah, a lot of people don't realize this, but we did the heavy lifting with our software team to build the platform for systemic trust. And this is a big deal because this is enterprise grade software that will interact with exchanges and banks and family offices and you name it. It has to report into FinTrack and other agencies that track and trace transactions in digital assets. So there was a lot of work to do building that platform, but we sort of got two birds with one stone there because we use that same platform for TerraPool as well for the onboarding and management of TerraPool, and that was a significant upgrade to TerraPool for us. And that's really going to help our carbon neutral Bitcoin ecosystem grow. Having a trust that can work with carbon neutral Bitcoin, hold wallets that are carbon neutral, working with TerraPool. So we think that's a great gain for us over the year. And then the last thing is we've entered into the AI with the Malahat MOU for 30 megawatts. And we're really excited about this. The Malahat are a great partner. We're busy working with them on our first small deployment, sort of a proof of our technology and our approach to what part of AI we want to go into. And so we should have more information coming out in the next little while on how things are progressing on the AI front. And as I've said before, our goal was not to do just one project with one indigenous band. We want to work with multiple. So we have a few more that are coming close to the same level as Malahat. So I think we'll have some more announcements about additional bands starting in BC, but we'd like to move across Canada that we'll be partnering up with to do a similar type of project as we're doing with the Malahat. And just, a note on that, something in the neighborhood of 20, 30 megawatts of AI, we're getting into $500 million, $1 billion type of project. So although the number of 30 megawatts may sound really small to people that follow crypto because people are dealing in hundreds of megawatts in crypto, in the world of AI, this is completely different economics. And maybe we'll get into that a little bit later in this interview.
Yeah, we most definitely will. We've heard the ratio is about 10 to 1 in terms of the megawatts for mining versus HPC AI, and we definitely want to follow up on the Malahat partnership later in the conversation. But before we do, and maybe more on the operations side under the Core Plus for you there, Steve, but can you give us a quick or simplified view, I guess, of all the different aspects or facets of this company? I know you've got your self-mining, your AI HPC under the core division. You just mentioned Core Plus, the Terra Pool, the Systemic Trust. There's so many different things going on at DMG. So for people who are maybe new or they've been in the story for quite some time, what's a simplified way to think about this company?
Well, this is why we split it into core and core plus, because core, we're talking about data center infrastructure. In the past, we talked about it solely with respect to Bitcoin mining, both self-mining and hosting. Now we've expanded that to be talking about AI. So we still have these two pillars, where the other pillar being core plus, software and services, keeping it simple with just two pieces. Now, of course, under that, it gets a lot more complicated, and this is where we try to explain it in more simple terms, where the Bitcoin mining we really see as there's an evolution going on, where we are going to be focused going forward on hydro, state-of-the-art equipment, really finding pockets of low-cost energy where it really is starting to look somewhat AI-ish, in the sense that we have greater capital intensity, still an order of magnitude less than AI, and really being able to capitalize on areas where the low-cost power with Starlink, you get the opportunity to be in remote sites. And the other thing is, as we were talking before the recorded session about all the repair, we believe that hydro also provides an opportunity for the need to be repairing miners goes down a lot, and hence being able to place miners in more remote sites becomes something more viable. So we're kind of looking the evolution of just moving to direct liquid cooling and being able to perhaps make the Bitcoin world more decentralized, but to take advantages of these pockets of low-cost power, combining with AI, and we'll talk more about that, but I think Sheldon already kind of gave you a good taste of where we're going on that. And then Core Plus with the software and services, really think about this as enablement for a carbon neutral Bitcoin ecosystem. So this is where we have certainly had our challenges over the years in terms of realizing the vision. Sheldon, many years ago, came up with this vision of being able to have a way for financial institutions to have the option to send Bitcoin without adding carbon, and being able to give that choice, also pulling out transactions from bad actors, utilizing our wallet score technology. And what we realized, and we've talked about this on past podcasts, is that we needed to build the trust. We're really proud that we have done that in a year. And I think, as we indicated on our earnings call, we're optimistic that receiving the qualified custodian status is coming very soon. And so we're excited about that. And then it's going to really be about customer acquisition. So if you think about these two pieces, Terra Pool and Systemic Trust, there are, of course, other pieces of software that we have, mostly related to Terra Pool. And those are to really increase the competitive advantage by having a carbon neutral pool. The idea is, yeah, you could have a pool, but you want people to stay on that pool. So it's building a suite of products around that. But with regards to the carbon neutral Bitcoin ecosystem, you have to have a way for financial institutions to be able to hold Bitcoin and then be able to send it to a pool that uses whose energy sources to mine blocks are based on carbon neutral energy sources. And then those transactions in turn get placed on the Bitcoin blockchain that way. Actually implementing that is very hard because you need wallet technology that's going to be able to interface with the pool. We haven't gone into detail, but we have partnered with a major wallet technology provider to be able to enable us to be able to get to market in a year. But beyond that is being able to have the additional capability of being able to send Bitcoin directly to the pool. And we said on the earnings call, we now have those pieces that are poised to be in place here very soon. The TerraPool software, as we talked about, was revamped. We're working on right now with the data center infrastructure management tool we call Helm, and for Bitcoin, and perhaps later for AI, and that improves the whole user experience of being on TerraPool. Is also having a mine management tool. But having all these pieces together, and then really this year focusing on customer acquisition. Of course, we've been working with potential customers for quite some time. But the reality is, until you're actually ready, until on the trust side, that you actually have the ability to hold third-party assets, and then on the pool side, really having the software ready, because once you turn on a pool in a big way, you have to keep it on, and you have to provide a user experience that's equivalent to the number one pool. That's always been our target, is we have to be at least as good as them. And then that on top of that are additional revenue opportunities from carbon neutral Bitcoin, with opportunities such as what we've collaborated with PayPal. And as we mentioned on the earnings call last month, we did have a recent call with them and Energy Web. And we hope that evolves where that Bitcoin miners who are on TerraPool can realize additional revenue opportunities for financial providers such as PayPal. When they have institutions send Bitcoin through their platform, they could do it in a way that's not quite like our Petra technology, but works in a way that still provides some revenue opportunities that ultimately get passed on to those who are on our pool. So we're putting these pieces together. We're progressing now to the customer acquisition stage. The other thing, of course, is expanding the platform. I gave you an idea with TerraPool is providing the data center infrastructure management tool, Helm. There's also integration of Reactor, but with Systemic Trust, that platform is going to evolve as well, being a standalone custody provider. Itself it's a good business, but to really build a competitive moat, other services need to be offered. We understand that. We have a go-to-market strategy that rolls out additional services over the course of the year, and we'll talk about that as we're ready to disclose them. So it's going to be a really exciting year, a very different year. We're going to be talking much more about AI. We're going to be talking with Bitcoin mining. It's going to be about hydro and finding these opportunities where we have low cost energy. And then on the software and services side, about customer acquisition and platform expansion. So I hope that summarizes well what your question.
It definitely does. And I know we wanted to spend some time on that at the front of the interview here, because as we get into the financials, some of the more deep dive questions, I wanted everyone to have an understanding of that structure or framework. And we've often referred to you both as visionaries in the field. You're OGs in the crypto mining space. So sometimes we just need to catch up on the vision a little bit, I guess, Sheldon, to see the full picture. But with that being said, Anthony, I'll pass it over for the financials, and then we can jump back to some of the details here.
Yeah, that's great. I mean, DMG just released its full year financials ending September 30th, 2024. Sheldon, can you talk through just a couple of the big highlights from that year before we start looking physically at some of the numbers involved?
Yeah, I think, 2024, as we were sort of saying earlier before we came live, was a year. It was a good year. It was a difficult year with the happening in there, where we're generating a lot more Bitcoin, albeit a lower price. But for DMG, we've always seen ourselves as a low cost Bitcoin generator. As I said, our headcount's sort of under 30 all the time, for many years. With the growth rate in our hash rate, we're continually having a very low G&A for the amount of Bitcoin we generate. We've only added 6 or so more bodies on the trust side. As we bring on new clients, we'll start adding more bodies. But when you look at our reporting in general, we're always cash flow positive in some way. And Sometimes, and a few times, we've been financially positive, which is not that common when you look at our peers. So, we've been really good at our equipment purchases. We have very little or no write-downs of our equipment. And so we've sort of timed the market properly, I would say. And the fact that, our cash generating units, to use some accounting terms, are producing enough cash for that cost of the equipment, I think is a testament to, our strategy. Some may say that we move too slow or we're too conservative. I would say that we're moving the right way to create a strong foundation of a company that's going to be around for a long time. Unfortunately, some of my friends that were CEOs a year or two ago are gone. I think maybe they were a bit too cavalier. That's damaging to shareholders. And we don't want to be a company like that. That's damaging to shareholders. I said a few times that, we are custody of thousands of shareholders that are entrusting us with their money. And we're trying to make the right decisions with their money. And so we can't be everything to everyone, but we can do our best to try and grow a company, perhaps a bit more conservative than some may like, but at least we're growing it in a responsible way where we see ourselves having a long future. Technically, as many of you know, when it gets into real financial questions, Stephen does my numbers. So I'll let him answer some of your technical questions. But when you just kind of look back at 2024, we came out of the halving, very strong. We've had strong quarters, under the conditions. If you look at our peers, we've done very well. And I think that's a testament to just, our management style and sort of, we kind of hold the course. We try not to buckle under pressure when, every company is trying to, go here and Bitcoin mine there, or buy these models of units right now and are fighting for them. We kind of keep to our strategy and try not to deviate from it. And it's been working for us quite well.
That's good to hear. And bear in mind, the last 12 months, or that reporting period, encompassed a halving in April, which affected everyone. And you're quite right to raise. I mean, I looked at a couple of the biggest peer miners out there. And if you go back over the sort of like last 8 quarters, maybe 2 of them are green. So, it has been a challenge. But bear in mind, we saw the Bitcoin price having to recover from when it dropped to like 15,000, just over $15,000 US dollars at the end of 2022. So we've seen that recovery. Well, what stood out for me? I mean, yes, you made and it was a small loss. It was, probably about $4 million US dollars for the whole year. But when you start looking at the cash costs, and I strip out things like depreciation, unrealized gains or losses, and things like stock compensation. Although I reiterate every time that these are true costs. They're cost to bear. You have to buy equipment. You are giving compensation to management and to employees, and that is a dilution to shareholders effectively. So they are true costs. But when you're running a business, you want to make sure that the revenues coming through, physical cash revenues, are able to pay those bills on a monthly basis. And what I noticed from the accounts, that you had strong margins both in gross margin and operating margin, and actually had a very much positive cash position. And if we're looking at percentages, probably one of the leading percentages on the market in terms of overall operating margin. Steve, what were your thoughts on that?
Yeah.
And just to add to that, don't forget that in those margins, which are quite strong, we're carrying a software team that is not really bringing in the revenue yet. We expect that to start coming in this year, and we hired and paid for a new team in systemic trust. And so we have a few $1 million in overhead that if we were just looking at pure Bitcoin mining would be gone, and our margins would be even stronger. So that those investment dollars are still baked into those numbers you're talking about.
Do you anticipate, as a quick side question to that response there, you anticipate the revenues that will come through from those teams to more than outweigh the costs in the future then?
Yeah, we expect to get
that's the whole. Yeah, and just kind of going back to taking a step back on Core Plus, is we have revamped our software processes such that we can deliver enterprise grade software. It wasn't just that we delivered some nice pieces of software next year. These are truly enterprise grade, and we're very proud of them. But beyond that, is, as I was saying earlier, is about customer acquisition. And we feel we're really now in a position to go out and acquire customers both for the trust and the pool. And that's really, I think, where we're going to prove out our software strategy. This is the year where, for us, this is the year that we have to do that. That is one of our top priorities.
I mean, one of the things I noticed in the accounts there, I mean, your long-term liabilities is pretty much zero. However, within your current liabilities, and for those listeners who aren't aware of the difference, current liabilities are those liabilities that need to be met within the next 12 months. You have got your loan sitting in that position there at the moment. Can you tell me? Because it's not an insignificant amount. It needs to be paid in the next 4 months. What's the plans to either amend the terms of that or to repay that? How is that going to occur?
Yeah, I mean, that's kind of a line. Think of it more as a line of credit that we have. So with Signa Bank, we actually have up to 19 million, and we've disclosed we've pulled 13.9 million Canadian of that, as we put on our financials. We can pay that. We can pay that down in greater than 12 months. But I think part of it is, I think that brings up a greater point in terms of our own treasury strategy and kind of how we think about the purpose of that loan was essentially so we didn't necessarily have to liquidate Bitcoin when we started in the early part of about a year ago of calendar 2024, where we said, well, let's utilize debt so we don't have to sell Bitcoin. And the interest rate is modest, and we're accumulating interest as well on that. That's 8.5% rate, which is very competitive. And let's defer being able to sell Bitcoin to pay for capital expenses. At some point, you have to pay for capital either from cash generation, which is from liquidation of Bitcoin, or raising some type of debt or equity. And we're not going to use equity to pay off debt. So, and maybe there's a restructuring of debt down the road. That's always an option as well. But the obvious thing is capitalize on these gains we've made on the Bitcoin that we didn't sell when we actually drew from the account. And we kind of look at cycles. If you look at past 4-year cycles, that it would imply this is the peak year. We don't know, but we kind of are looking at it and saying, yeah, maybe at some point we want to lock in some really, really good gains when it's 2x, on the order of 2x gains. That's really good treasury management. And that's kind of how we're looking at it, is the debt. So we could continue to draw on that up to, as we indicated on our earnings call, up to around the full 19 million, or we could start paying it down. And one of the ways we could pay that down is through liquidation of Bitcoin. So we're really happy. We've been really happy with this instrument. And it's allowed us to defer also raising equity, which we did late last year, to be able to pay for our new hydro mining equipment, as well as for general corporate purposes. And so we're utilizing both debt and equity. We said probably at least a year ago we wanted to defer raising equity as long as possible. We don't want to over lever. As Sheldon was saying, there were some CEOs where things didn't end up well for them that were around a couple of years ago. And we want to be prudent stewards of capital and how we essentially manage our capital structure. And we'll probably pay that down as we go, and there will be, and also, as we've indicated, if we're talking about with AI, there's the amount of capital that will need to be the amount of capital that needs to be paid for. We are going to have to raise additional capital, but we do have other options for being able to raise that capital for AI equipment, especially as we line up the offtake agreements. Then it becomes fairly straightforward. And I think this is why the investment community also loves AI so much more than Bitcoin mining, and we get it. Like, if you have an offtake agreement for several years where the revenue is understood, the revenue excluding the energy cost whether it's for hosting or for the price of the utilizing the GPUs, that's a business where people can it's much easier to do valuation analysis, as from looking at valuing companies. It's really hard to value a Bitcoin mining company. Some analysts have suggested 5 times revenue is a good multiple for what market cap should be, or EV. Why 5x? Is it maybe it's the markets have kind of suggested it's all over the map, and it's not even clear or consistent why some companies are valued more than others. But we get it that AI certainly provides a more steady type of revenue stream and cash generation capability that makes it much more straightforward to perform valuation. So when analysts looks at us, and he can say, well, DMG with their AI offtake agreements can generate this amount of cash. It's much easier to value based on this amount of exahash.
Yeah.
And so this is also kind of going forward how we're looking, and just kind of highlighting, trying to anticipate some of your other questions. This is how we're looking going forward. But At least to date, we've been utilizing a combination of debt and equity, and we'll likely continue that in the future.
Yeah, you probably covered about 3 or 4 other questions in there. There's a couple of things I'd like to just sort of highlight though. Um, uh, your Bitcoin hodl at the moment, I think 403 in your updates this week. That pretty much puts your value of your Bitcoin is 72% of the market capitalization at the moment, which from a percentage position is the highest of any of the North American public miners. I think Marathon is just behind you on about 70 or 71%. So, but you're not getting the same sort of like love. And if you look at book values, this was interesting when I went through the accounts when they came out. Your book value is actually higher than your market capitalization. So for investors going out there buying DMG stock, if you're investing $1 in a stock, you're getting more than $1 in assets. And that doesn't happen across any of the other miners in the space. There is one other miner that has that ratio, but if you start looking through some of their balance sheets, you'll find there are some preferred dividends and stock and minority interests, and once you unpick that, it's not in the same ballpark. So I think the only positive one at the moment I've seen that has a positive value there.
It's a price to book of less than 1, and usually, I'm a former equity research analyst. Usually, those types of companies have impaired balance sheets, are burning through cash, negative cash flow. None of those apply to DMG.
Oh.
So we have a lot of work to do, clearly, to get the stock to where it needs to be. We get it. And you've pointed out another metric that just highlights that. So,
if you were to come in and if someone's going to buy DMG and pay your market capitalization at the moment, which when I looked the other day was, I don't know, say 57 million US dollars, and there's nearly 40 million sat on the balance sheet in Treasury in just a Bitcoin. That's quite an attractive. That's quite an attractive proposition when you think then how much are they paying for 1.7 exahash of Bitcoin mining, and if you start doing a valuation on hash rate by companies, and compare it to some of the other North American, their valuation per hash rate could be in the multitude of 4 to 5 times more than DMG. So, you've got great metrics, but you raise the point there. It's about how the market's perceiving the company, and how can you get that to change in the future? Because everything stacks up. I mean, I agree with Sheldon. You do things in a more methodic way, and I know some of those CEOs that I interviewed 3 or 4 years ago. Some of the most popular CEOs out there, they're no longer in that job because they were, like you say, a little bit cavalier. I'm an accountant, and I question the debts on some of those companies, and I was eventually proved right on a couple of them as they went literally petering over the edge of Chapter 11.
Well, we appreciate your kind words. I mean, that's really all we can say. I mean, we believe over time that our story will resonate more broadly. I think one of the things that we said on the earnings call with the capital raise that we recently did, that we hope that there will be some additional analyst coverage as well, and with more of the Wall Street analysts out there telling the story, we hope that the story gets heard among a wider community.
Yeah, I'm glad you brought up some of those metrics, Anthony, because as analysts in this space, we look at a lot of these apple-to-apple comparisons between the miners, and definitely some opportunities here with the DMG numbers. So with that being said, you've made reference to this earlier in the conversation, but some of the Core Plus opportunities starting to generate revenue in 2025, or at least that's the plan as of right now. Can you share any details on when or how much revenue may be coming from these Core Plus division?
Yeah, I don't think we can be specific about revenue. I think that is really a function of how the customer acquisition process goes, but we do have very detailed plans, and what we would say is look to this coming year is for building revenue, and subsequent years for much more material revenue. I think what we've said historically is we look to Core Plus as being similar size revenue to the Bitcoin mining piece of our core business, and that's still our vision, is it to be substantial. So, our Bitcoin mining revenue business last year was about $34 million, and that's the order of magnitude that we want to drive in terms of revenue from Core Plus. So, it's going to take time, but we're not in this just to have a little side business. We really want Core Plus to be substantial and to drive outsized valuation relative to the Bitcoin mining piece of Core.
Makes sense. And actually a really good segue to the next section here, which is the self-mining or the Bitcoin mining. So thanks for framing that one for us, Steve. Moving into the self-mining, you guys talked about the hash rate growth, 1.72 exahash, the number being thrown around. Now, you also mentioned the goal of end of year targets and then eventually that 3 exahash. So how should we think about that coming online throughout the year? You talked about some of those remote pockets of opportunity. You talked about the hydro miner improvements. How can we think about these targets throughout the year?
Well, I think it's a mixture of that. I mean, we'll be looking at, putting more into Christina Lake. It's a bit of a balancing act because we'll be actively working on our AI implementation as well at Christina Lake. But there's enough megawatts in Christina Lake that, when you look at the hydros that, we're putting in 0.4 exahash right now, when you look at the efficiency gains that are coming in the hydros in the second half of the year, and sort of how the joules per terahash are dropping down again significantly. Every time they drop down, it's more exahash you can get into a facility. So as we look at, retiring our J Pros, we'll be looking at putting hydro in, and we'll get we should get a substantial hash rate bump for that. And that's just Christina Lake. Outside of Christina Lake, there's a few different properties that we're actively pursuing. We've been talking about another location, that's a low-cost operation in Canada, but not in BC for some time. We wish that agreement would have completed, and we're still working on it. I think it's, I've said before, we think we're pretty close. One of the difficulties of getting that done is that it is remote. It is a difficult place to build in. It, once the operation's up and running, you think it'll be quite lucrative. It's a tough it's a very long contract. And normally we own everything. We own all our own property and land. This would be a situation where we don't own everything. So it's a little bit different for us. So the negotiation's gone a lot longer than we want. But, we're pretty excited about it. And we're looking at, the AI build out, potentially being a hybrid of crypto and AI. It takes a while to build the AI part, but the power infrastructure is quite quick. And so, you can be looking at putting crypto in and then taking it out, relocating it, or retiring it after a few years, while you're building up the AI components and the contracts for the offtake. So hitting 3 exahash, we think, is something very doable in the calendar year 2025. It's, a function of capital, which we believe that we have access to, whether it's debt, or something else. We've been very good with the debts. Stephen was sort of explaining the debt. I think, for the average investor, what they may not understand, and we went through this with you before in a podcast when we did our $1 million of debt on a property. We did that when Bitcoin was $16,000 a coin. Instead of buying coins, we took $1 million of debt, and we waited 18 months to pay that back. And it went from 16,000. I think we paid it back around $60,000 a Bitcoin. And you just kind of say, well, how many Bitcoins did I have to sell to get $1 million at 16,000 versus 60,000? And, you know, when we took the debt with Signum, it was like $42,000 a coin. And so when you look at, you know, the 13.9 we have in Canadian dollars of debt, you kind of go, well, if we would have sold Bitcoin at around $42,000 US versus 95 it is now, these are substantial gains that we're making, you know, in our treasury management. And we will, you know, start paying that back. They're, you know, the math says you can only take the interest for so long, then it's not worth it. I mean, we've got a long time we can keep going. But you know, we're kind of looking at the cycles of Bitcoin, and you know, we want to sell at a high and accumulate at a low, and we've done it in the past. So, you know, going kind of back to your question, you know, for us, you know, we have a lot of levers and opportunities to move our hash rate up, and you know, right now it's all Canadian based. The US isn't out of the question. We've had lots of discussions about moving into the US. I think it's probably going to be one of your questions later on about the US. You know, Steve and I are in the US right now, looking at some stuff and in some negotiations right now. You know, we're not really seeing an issue growing hash rate in the calendar year. I think we're probably looking more execution on the core plus as our bigger challenge and more effort. You know, deploying more megawatts won't be a difficult challenge for us. We're not staying up late at night figuring out how we go from you know 2.1 to 3. I think we're staying up late at night going, how are we going to execute AI in a meaningful way, and how are we going to, you know, onboard STC clients and TerraPool clients in a meaningful way. I think those are the things that we're really thinking about.
Yeah. In terms of self-mining for December, we just got your recent update out, and 32 Bitcoin mined with your now improved hash rate. You reached a high of 1.72. Your average hash rate for the month was 1.68, I believe. And that actually gave you, we were still waiting for one miner to release their results, but I can probably safely say that's given you top spot for December. You've picked Bitfarms, who generally, over the last 4 years, them and Hive have pretty much dominated the sort of the Bitcoin by exahash ratios. You've had a great year in terms of that. We've completed the 12 months for December. I think you've finished certainly in the top 5. So hats off to a great year for DMG. In terms of the price of energy at the moment, are you seeing any impact in terms of, you know, what you're seeing now for December, January compared to what you were earlier in the year? We've just seen a couple of your peer miners coming out that they list their energy costs on their updates, and one of them had a 50% increase in price just for December. Are you seeing anything like that in Canada at the moment?
When you look at DMG, our story is a little bit different in energy. And as we've said in the past, you know, we work off of a fixed power on a fixed rate with our utility. And so that price of power is consistent. The only way it changes is if the regulatory authority allows them to increase it for, you know, they have to put a case in. So, you know, we are a large industrial, just like any pulp mill or mining operation would have the same cost of power that would own their own private substation. So, you know, and we've taken advantage of that from day one. We have, however, been working on for many years, and you know, it comes up every now and then. We do have a U.S. power export license. I think we're probably the only crypto miner in Canada that has a U.S. export license for power. We have been working with our utility on getting access to the Mid-C market, which is the wholesale market in between Washington and British Columbia. And so we've started just this month wheeling some power with our utility on the wholesale market, trying that out. As you know, power has been fairly expensive and gaining in costs on wholesale markets. And, you know, Texas is a great example of that. It's kind of goes up and down, but it's been a bit more up than down. Now, with the new presidency and the policies that we believe they're going to put into place in the U.S. on energy, and, you know, Trump saying that, low cost of energy is a key part to economic growth for his country. We believe the same thing in Canada. A low cost of power is a key part of economic growth for Canada as well. We don't know who's going to be in government, come this summer, whether it's going to be the same government or a change of government. But I think we feel pretty certain that the cost of power across Canada, and the cost, in Washington State, which is important to us for wholesale market, is going to come down in the summer. And so for us to start working on the wholesale market, we think that, we'll be able to beat and hopefully beat in a meaningful way our fixed price cost by going onto the wholesale market. Traditionally, we've been against that with our utility. We'd like to know our cost and be able to manage that. And I think we've done a really good job of that. If we can get a 20 or 30% reduction month over month in our power costs, that will be material when you're running 3 exahash of power. So yeah, we're going to start talking a little bit more. Yeah, we're going to start talking a little bit more about our power, where we'll have basically 2 contracts. One, which will be a fixed firm delivery, which we require that for AI, and one which will be wholesale power, like you commonly talk to people about, that will go up and down with the market. And we'll have to get a bit smarter on how we play the power market. But we're up for that challenge, and we think overall we'll be better off on the wholesale market on crypto mining, and that will allow us to curtail when prices are high, and we don't want to pay a high price, but definitely take advantage of low cost power as well. So that'll be a little bit different for us in 2025. Like I say, we're protecting our position with the firm power for AI, and we're going to take a bit more risk on the power for crypto. But we think, just kind of from a macroeconomic point of view, that power markets will improve from a cost point of view to us in the mid-C market, and be better than our firm price of power. So it's a long answer to a short question, but this will be a little bit different for us in 2025, but we think we'll come out winning on this.
Yeah, it makes a sensible choice there, having your low cost power for Bitcoin mining. The HPC has far bigger margins on the electricity costs, so you can utilize the fixed price for that business itself. In terms of merger and acquisitions, we've seen a few in 2024. I think it was 4 or 5, and obviously we had the Riot platforms trying to purchase Bitfarms. Do you expect to see M&A activity through 2025? Is it something that's on your agenda at all in terms of opportunities that may come your way?
I think it's a good question. I think it kind of answer it every 6 months or so. Please don't tell Riot about us.
Got Jason on speed dial.
There you go.
Yeah. We don't want to go through what Bitfarms did, and obviously we're at the sidelines watching these things. But we're kind of more of believing in attrition. We think that when you look at M&A in crypto mining, normally and Steve and I said this before, normally the cost of buying new miners is less than the cost of merging with another company. So unless there's something they have above and beyond the asset value and the cash generation of their existing fleet that you really want, it's really hard to go into an M&A deal. What we're seeing is more deals of miners getting access to power agreements and larger amounts of power, and not so much buying up other miners. And so that's why we kind of think it's going to be attrition. The stronger companies will survive. The weaker ones will, turn into something else. And maybe a few get picked up along the way. We'd like to think that we're a strong company that can survive. At least we think from our financials we are, and our strategy. So I don't expect a lot of M&A of crypto to buying crypto. I think there's M&A or deals to be had in crypto to get access to more power. And if that includes a few machines, great. That's just gravy. But it's really going to be what power contract and terms can I get that would be good for me as a crypto miner to grow.
Yeah, I mean, Sheldon, I think you summed it up pretty well. It's just the synergies are negative typically, because unless a miner has absolutely leading edge equipment, which is what you'd want to buy, and something else that justifies some huge premium that the other management team is going to want, it doesn't make sense. So I'm not sure about this idea of consolidation that we see in other industries that is going to happen. As we said, the kind of the evolution of the industry is making it such that it's really going to be about finding pockets of low cost energy, not necessarily having scale, because scale doesn't necessarily provide an advantage. And especially as you say, okay, you have this big mining farm in a region where the price of power goes up significantly and maybe stays up. So, that doesn't necessarily provide the consolidation piece, whether it's building these large scale mining farms or just acquiring other companies, doesn't necessarily provide the benefit that you're going to get accretion in the share price. And ultimately, that as a company, that's why we would want to acquire somebody else. I mean, it doesn't rule out potential software acquisitions and software. We did acquire the assets of Reactor, the hash rate contract management platform from Navier, and potentially we would look at others, but generally I think they're going to be far and few, far in between, and not a whole lot as we kind of look forward. We did have our stab at corporate development historically. Even that didn't work out necessarily as well as we were hoping in terms of providing some enablement for the type of ecosystem we're building. As Sheldon alluded to, Brain Capital, we made an investment in what we were hoping would become a qualified custodian. Didn't pan out. We realized the only way to really make qualified custodian piece happen and have that as part of our carbon neutral Bitcoin ecosystem is to do it ourselves. And I think you'll just find DMG, we're going to do things ourselves in conjunction with partners who can help us execute.
Sure.
Kind of how we've done things historically, and that's likely going forward, especially as we look at AI.
Yeah, most definitely, especially when you have all the in-house expertise there. So great segue once again, Steve, to AI. I know you guys mentioned a lot about the strategy here, the growth, how you think about AI, the valuation, the funding. One thing you talked about early in the conversation is the agreement with the Malahat Indigenous Group. I wanted to talk about some of the details there in terms of, you mentioned the pilot project, when we can see that online, what kind of hardware they're using, and around the funding agreement there, whether or not that'll be funded in a partnership or from DMG or the Malahat themselves.
No, those are all great questions. We're very happy right now with our Malahat agreement. They're a great partner. They have the ability to open a lot of doors, which is great. And just to give some color on what we're planning to do with the Malahat. And as I said earlier before we started, we have two other nations that we're trying to conclude some agreements with already in British Columbia. And, we're talking to some other nations, outside of BC, but, obviously in Canada, as we're looking at other provinces to sort of repeat sort of the structure and the same kind of deal terms as we have with the Malahat. But for the Malahat, what is really interesting for us is sort of two things. One, for Indigenous-led projects, saying we can properly line up the offtake agreements, which is what we're working on right now. Before you want to build any AI and start putting in hundreds of millions of dollars, you want to make sure you have a customer who's going to pay you. So, with those offtake agreements, once we sort of start finalizing a few of them, we're able to go to the First Nations Finance Authority for financing. Doesn't mean we'll get it, but with offtake agreements, it's a good high probability that we will. And so this would give us low cost financing from the federal government for our project. And I think that's something that, if we can do this, we would like to do that. This will be, the lowest type of debt we could get with great terms and on a long period for repayment. So, that would be great for us, obviously great for our shareholders, because it would be, we wouldn't be looking at dilution to grow, and, great for our balance sheet. So, that's kind of one of the things we looked at, that makes a partnership with the Malahat very interesting. Getting debt for AI is not near as difficult as getting debt for crypto. So there's a lot of people lining up that are interested, as Stephen said, because they understand the AI market, they understand the valuation, they understand these contracts, and it's a lot easier for financial institutions or third parties to give debt on it. Still not as good of terms as you would get through government debt, which is, traditionally the cheapest. So that's a great thing. And then the second part of why the Malahat's a great partner is, they have the ability to go into government and start talking about their operations, selling, offtake agreements into government agencies. And so that's something that, for the average company, unless you're AWS or Microsoft or somebody like that, that has a history of selling, compute services to government agencies, it's quite difficult to get into. With Malahat, we're finding that a lot of doors are opening with them in different ministries that are buying compute power, that are interested in buying it locally within Canada, interested in supporting, Indigenous nations in Canada economically, build out and become self-sustained. And so we're finding that that's becoming, a sales advantage to us that is making this, relationship very interesting, versus if we were trying to do that on our own, if we were just to build a data center and try and find a sales path. I think a lot of people have to realize Bitcoin miners are not salespeople. So we don't have a client except for the Bitcoin protocol. So we're not used to, having to manage a sales process. It's not inherent to us. Whereas data center people, always have to have an offtake agreement with somebody that they have to manage those expectations and deliver. And so what the Malahat are doing is basically opening doors to what we think are very good buyers of service. The Malahat Nation, many people may not know this, are already consumers of, high performance compute. I wouldn't say, I don't know if I'd say it's AI, but it's AI adjacent in the operation of their nation. They do a lot of work with providers like AWS and satellite providers, covering their lands, looking at what's going on in agriculture and forestry on their waterways. And so they're already users of compute, which is why working with us was really interesting for them. And a lot of bands are. And so, they already have a small operation of their own equipment. We're going to augment that with more GPU. Right now it's probably going to be the A100 series, which is, a bit lower end in the age, but for what we want to do to expand what they're doing, to start working with a few other nations to give some demos of what can be done to government and potential offtake buyers, it's good enough. To get up and going. And it's a small investment, probably $500,000 or so, which was just not, a drop in the bucket for what AI is like. But, like I say, we really see a lot of activity that we could publicly start announcing once we have some offtake agreements in hand, which is really the key to the capital starting to flow and, the procurement starting to happen, the execution starting to happen. Where we become quite valuable to the Malahat, though, is, they're a greenfield operation when it comes to an AI data center. It has to be, constructed and built and commissioned and turned on. Whereas DMG, we don't have to do that. We already have the power distribution, we have the building, we have the fiber, we have everything there. So, once agreements are in place, we can execute on DMG's property, much faster in months compared to, a year plus on a greenfield operation. So, the concept is that we would start, building out as a JV on DMG's property, Christina Lake, as we talked about keeping the firm power there for that purpose. And as we build out, Christina Lake will sort of max out our agreements 15 megawatts on our site with them. But at that same time, we can start building up there. So as the contracts come in and we move past the 15 up to 30, their site will be up and running, and we'll move forward as a 30 megawatt JV split between the two sites. And maybe we grow beyond that, but that's the initial agreement for right now.
Yeah, that's great. I was looking forward to getting some details on that. A really unique opportunity, I think, and like you say, opens the doors for a lot of future potential with the Indigenous bands here in Canada. So thank you for the explanation there. We've covered quite a bit today, you guys, everything from AI, the hydro miners, growth, exahash, Q4 results. I wanted to throw the microphone back, give you guys an opportunity to close out, maybe mention anything upcoming that we haven't touched on yet in today's discussion. But once again, thank you so much for the time and all the detail today.
I think we've covered quite a bit. Sort of as we started, the hydro development, putting us up beyond 2 exahash, happening this quarter is kind of finishing out what we wanted to do. And we picked hydro on purpose. And I'm not sure if we covered this last time, but, everything we have right now is air cooled. We did do a lot of work and we ran some immersion. We were going to scale in immersion, so like a fluid, dielectric fluid. But we switched to hydro on purpose. And there's a lot of debate about this, but we did it because when you look at the way AI is going, it's all going to direct liquid cooling, similar to hydro. And so we picked a hydro deployment because we wanted to get some experience with direct liquid cooling before we started implementing the same type of technology for AI. So we wanted to get some experience with that. But I think, the hydro development, STC becoming qualified custodian, which we expect, sometime this month, saying everything we understand is correct. Then just sort of focusing on customer acquisition on the Core Plus, which is STC and TerraPool. We will keep everybody up to date on our AI. I think we gave a lot of color on what we're doing and what we're focused on. We do see ourselves announcing more deals with Indigenous-led partnerships in I would say not the not too distant future or the near future. And as we can solve or complete the offtake agreements, I think you'll see a lot of more interesting announcements from us on execution timelines, what's going to happen, when it's going to happen, how we're going to do it. All of these things where they're kind of question marks. I mean, to us, they're not question marks. We kind of already know those things, but we're not going to say them until we've got it well thought out and we can say something quite confidently.
Of course. Yeah, it should be an exciting year. A lot on the horizon, a lot of catalysts to come. So thank you once again, you guys, for your time today. Let us know in the comment section below if you're currently holding shares of DMG, what you think about the strategy entering Q1 2025 calendar year here, and of course, your thought on the Bitcoin mining sector overall for 2025. So thanks again, you guys. We'll see you back here tomorrow.